Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. We have got a lot of really interesting things to get into in this video. Not only will we be looking at the Bitcoin chart, but we'll be going over a variety of things taking place within and externally to the cryptocurrency market that are having an effect on it. So we will dive into the price, we will look at the market generally, but I really want to kick things off with some of the main headlines that were coming or that were present yesterday. Now, this is actually old news, and I actually did a whole video on this where I said, isn't it ironic how the US government own more Bitcoin than Michael Saylor, the kind of Bitcoin priest or messiah that he is. US government dumps Bitcoin stolen from Silk Road, $1.2 billion to go. The US government has been busy selling Silk Road's Bitcoin, but it has loads more to liquidate over the course of the year. So I want to break this down because I think this is causing, of course, you had Justin Sun get on board with this. US government has announced its intention to sell an additional 41,500 BTC this year. To minimize the potential impact on the market, I would like to offer to purchase these BTC at a 10% discount for an OTC deal. Always the opportunist, Justin Sun. And you can see the US government have already dumped 9,800 Bitcoin on March the 14th. So 9,800 Bitcoin. Let's go and take a look at March. So this is causing a lot more fear than I think potentially it should. I'm not sure what's going on here, guys. But if we look at March the 14th, the price actually did this, right? Okay, so this was a relatively not so bad day. I think this is March the 14th here. And this is when the US government supposedly dumped 9,800 Bitcoin. So they are not doing that openly on Binance or on any other market. Otherwise, you would have seen the price literally. You'd have seen a mammoth of a wick if that was the case. I'm not sure. Yeah, there we go. That's why it's messing around. So the US government do have supposedly $1.2 billion worth of Bitcoin to sell. However, they're likely doing that over the counter. And of course, Justin Sun's trying to get his 10% discount that he would likely then go and dump on the market anyway and make that 10% in an OTC deal and other such ways. So let's read a little bit more of this and then we'll leave it just to give you a kind of overview of what's potentially taking place. Also, the Mt. Gox news has gone very quiet. This is not a new threat. This is a threat that's been known about certainly from this channel and many others for a while. And ultimately, I don't think that it's going to have a large bearing on the price at all. You may get, and I'm not going to say there's not going to be any shenanigans in this. You know, somebody like JP Morgan could buy, or one of these big institutions, and then spot dump it to dump the market only for them to buy back, and they could start trading like that. But ultimately, I think this is largely a nothing burger. We've known about this for ages. They've already supposedly dumped 9,800, and you can see what the price has done in the sort of face of that. So this is not open market. Will there be a player that buys some of these Bitcoin and then dumps on the open market? I can't say that won't happen, but we'll cross that bridge when we get to it. So the US government just sold off more than 9,800 BTC connected to Silk Road, darknet marketplace, about $215 million earlier this month. A court filing released Friday shows. James Zong pleaded guilty to hacking Silk Road in 2012, and stealing more than 50,000 BTC worth less than $1 million at the time, which the government seized in November 2022. In total, from Zong investigation, the government has obtained final orders of forfeiture for approximately 51,680 BTC, valued at over $3.4 billion at the time of seizure, the court filing noted. On March the 14th, the government sold about 9,861 BTC for around 21,800 per token. Wow, so somebody's made some decent sort of 21,000 down here, and they've obviously bought it for not such a bad price at all. So I think just to round all this up, I don't want to read too much of it because we've got quite a bit to cover as well. This largely is not that significant. It is a sell pressure. If it wasn't the US government being a sell pressure, it would be somebody else. Michael Saylor getting liquidated or some other big player. You're always going to have these guys. Don't let this scare you. And the fact that we've already seen a distribution or selling of 9,800 and the price hasn't really, certainly didn't tank like you'd expect it to if it was an actual market sell. This is OTC, over the counter, and I don't think this is largely going to have an effect on the price. And you guys know where we think Bitcoin's heading, but we'll jump into that in just a second. Found this very interesting from Daniel DiMartini Booth. In the next Q, so this is from JP Morgan, we could see risk assets rally. You could have a feel-good period of reality. You could have a feel-good period and reality catches up. If you've been taught anything this month, you may see it coming. You may not. You don't know exactly where it's going to hit, but once it hits, whatever you own, you own. This is from JP Morgan. So we largely agree with this, don't we? Because we ultimately think that you're going to have this, they're not going to really raise rates anymore. We've done all the sort of correlation to markets and what happens when they don't raise rates after raising them, and then what happens when they reduce them. And, you know, we've really looked at this in quite a lot of detail. And we think rates are done. You know, we're looking at the 2-year yields. We think ultimately your rates are done. And just to sort of show this again, because it's important, because this we've also said there's a lot of similarities to 2019. This is where we're at, right? In my opinion. Here. This is where we're at. You know, rates are coming down. You've had this big dip. You might get some sort of a bid up, and then it rolls like that again. But your rates will do this. And the S&P, which is in baby blue, could even go on to put in a new high. That's what I'm calling on this channel right now. Until they have to bring rates down rapidly, which is likely going to be due to further decay in the sort of US banking sector. The US as a global power due to its currency is done, ladies and gentlemen. I'm going to do a whole video on that. They know it's done, and that's the reason that they printed $7 trillion in 2 years. It took them 215 years to do that prior. Now they've just gone, well, the game's up. We might as well get what we can out of it. And I'll do a full video on that at some point. So this is what we're looking at. Rates going sideways. Rates are in Bitcoin orange, baby blue for the S&P, and then the yield, 2-year yield, which leads it. Rates are going to go sideways. Market's going to go up. Yields are going to continue to decline, showing us that rates are over. Or you could say, look, it's actually kind of even similar to, if this is 2000 and the repo market, you can see here. The only thing that's slightly different here is the 2-year really didn't lead. But rates go sideways. Market goes up in this period until they pivot, which everyone thinks is bullish. Then they basically tank the markets. Again, rates going sideways. This isn't the perfect example of it, to be honest. And then your markets do this. So it could be more of a short period of upside. So it doesn't have to put in a new high or anything like that. But I think this is that's kind of what JP Morgan are talking about. You know, and this is what we've said with your window of opportunity before something really does hit the fan. If there's something that's hitting the fan, guys, it's certainly, you know, we're looking at things priced in the US dollar. There's going to be, I think, some sort of a March 2020 style situation. It doesn't have to be that specifically, but, you know, to that kind of magnitude, it's going to cause markets to wet the bed. And, you know, maybe Bitcoin's at 40, 50K by that point. Maybe it's at, you know, we definitely think 35K is on the horizon. We've been spot on about it so far. Isn't it interesting how all of our altcoin plays are playing out? You know, this is what we're looking at for altcoins. It's 5-wave structure that Bitcoin is obviously leading the charge on, and they are just starting their third wave. We've been calling for the third wave. We've been calling for the first wave, let alone the third, for a while, and getting things spot on. It is the first of the month, guys, so if you do want to join my group, now's a great time to do it. You can always join for 1 month, and if it's not for you, it's not for you. I personally think it's well worth the money. We've got 2 exclusive interviews on there that just came out this week. One with Francis and one with Bill Laboon. However, they will be coming out on YouTube later on if you do want to wait for them. So this is interesting. Interesting that JP Morgan is saying this, and they're also saying whatever you own, you own. So maybe they're talking about like I don't know. There's some. It's the end of the dollar system. It's the end of a lot of things, guys. And how is that all going to play through is I still think yet to be seen. But it's very interesting, these comments on JP Morgan. This is bank runs in slow motion continues. Depositors at US banks fall sharply for the second week. So we're still seeing depositors withdraw from the US system. And actually, contradictory, Germany, I think, has just reached a high in terms of depositors. Or is at its local high. And I think the US is in real trouble, to be honest. I really do. Because they just can't go on in the same manner. You're trying to tighten and increase the amount of money you need to service this colossal debt market. And it's just totally unsustainable. And this is why we're seeing things break, and we're going to continue to see things break. And this is why I think that they're not going to up rates anymore, because they're already imploding the system. You keep dropping rates, you're just going to accelerate that. Whereas I think they're going to try and buy time. They're going to cool the situation down and say, okay, everything's fine, don't worry. You know, we're going to keep rates where they are. Inflation's going to keep coming down. Everyone's going to be in this kind of joyous period, ready for a March 2020 style, which could be 6, 12, 24 months down the line. We're still yet to see. But you are still seeing, it's not really bank runs, but you're seeing depositors continue to take money off the out of the banking system. And rightfully so. Those guys are complete crooks, guys. So this is key Fed inflation gauge, rose 0.3% in February, less than expected. I think you're going to get lower CPI in March. I think this is going to fuel things. I think we're at this sort of natural period for Bitcoin here where it's going to run into resistance. It's going to sort of lull about. And then all of a sudden you'll go, boop. And everyone will go, oh, what? How come we're at 35K? You know, I didn't get a chance to buy, even though there's been plenty of chances on the way up. If you follow this channel, and certainly if you're a part of the Patreon, you've taken full advantage of this, and you're doing quite nicely now. But you'll be here before you know it, guys. Then you might have some sort of correction, and then we'll see if we can get that fifth wave in. Watch out. I'm going to be releasing the interview that I did with Francis Hunt very, very soon. Absolute alpha in that interview. The guy's an absolute market legend. And he talks about some really, really interesting things like Bitcoin targets and how all of this kind of unfolds and what, you know, he's looking at moving forwards. Take a quick look at the week ahead, but we'll look at this a little bit more seriously tomorrow, along with other things. Big one for me is, of course, the non-farm payroll. First Friday of every month. And you're going to see, remember, this is what they're using, or one of the barometers they're using to keep upping interest rates, because you've got a strong labour market. Well, if that starts to look not so strong, it also backs... rates aren't going up, in my opinion. 2.5, they had to do a 2.5 this one, they couldn't not. Otherwise, markets would have gone full mania. I think they're done with rates, and I think it doesn't really matter what the big thing to watch here, of course, would be the US dollar. But I think the US dollar, you might get lower rates. It's been two really strong, lower non-farm employment, and that will cause further weakness of the US dollar. I don't mind this structure. I like a double bottom, but at the same time, this can very quickly, on this downward trajectory, turn into not that. And, you know, this would further risk. Gold's looking really good as well. Just tells you a lot. You know, there's a picture being painted here by the markets, and that is that, you know, risk's going to be the flavor for a little bit. And certainly things like gold and Bitcoin, which are anti-fiats, are going to likely do quite well. That's all I've got for you in this video, guys. You enjoyed the content, like us, appreciate it as a comment. You know the score with Bitcoin, where we think it's going, and of course, you know where we think altcoins are going. We think they're on their next leg. Some altcoins look a lot more bullish than others. If you want to find out what I've bought, where I've bought, please feel free to join the Patreon. All I've got for you in this one, guys. You enjoyed the content, like us, appreciate it as a comment, and I'll see you in the next. Thanks a lot for watching, ladies and gents.